Hello. Okay, next up on the live stage, we've got a panel about finance. Is the PCP bubble about to burst? PCPs have grown in popularity and now make up more than 80% of all new car sales. There's also been responsible for increasing...
Stage, first of today's sessions on finance will be starting in a couple of minutes. That's the first of today's sessions on finance, and the live stage will be starting in a couple of minutes.
Or has already started. Please welcome my guests to the stage to discuss this topic. Well, it's really put me off my stride. Oh, sorry about that. Hopefully you won't talk again. Okay, with me, a couple of introductions. We've got Gwyn Jones. He's the Regional Development Manager for Blue Motor Finance, fast-growing company offering consumer finance, lending more than £500 million to car buyers since 2014. And Nigel Wray, he's the Managing Director of Product Partnerships at an FCA-approved company that acts as a principal and compliance specialist for businesses offering consumer credit facilities. Okay, so with diesels falling drastically out of favour and our manufacturers and finance companies starting to stare at a huge negative equity, and are you worried about PCPs in the future?
For us, as a relatively young finance company, we don't have that exposure. We don't have a PCP product out there in the marketplace. That isn't to say that we don't have one signed off and in the wings, because we do, but PCP wasn't our route to go down. We decided that we wanted to provide the market and the customer with a real viable alternative, which is effectively an extended HP agreement, or we term it ECP, Extended Contract Plan. In terms of whether or not there is an exposure issue, I think it's fair to say that there's been quite a lot of testing by the regulator in this regard. And the interim report that was published just last month kind of gave a relatively clean bill of health to finance companies per se out there, in that there's a lot of stress testing that had been done in terms of where guaranteed future values were being fixed at around 80 or 85% of cap monitor value.
Nigel, are you worried about the amount of diesel, the way diesels are falling at the moment, and whether that's exposing finance companies in any way?
I think from our perspective, obviously, we're more on the compliance side. I think, as has just been said, there's been a lot of stress testing that's been done by the banks and externally, and it does look as though that has passed the test. So I think from a stress test with, in terms of residual values, then I think everybody feels comfortable. I think the issues potentially, are there any compliance issues? Obviously, in terms of press, you know, it's had bad press within the last few months. So there's potentially, I think, other more important things, rather than the finance companies seem to be managing the residual risk, and that seems to be okay. I think the risk is from other areas. It's even been called a toxic product, I think, at one time. So it's a case of whether it can override those kind of factors. And obviously, what's the next stage in terms of potentially, as we may talk about, leasing.
So are you concerned about this FCA investigation in any way?
I don't feel that, that as a lender, we're not concerned directly about that area of exposure, because we don't have exposure to it. I think that more widely, there has been concern across the industry in terms of, was PCP going to be potentially the next mis-sell, which I know is really what we want to try and get to today in terms of discussing this point. I think that what you can glean from the research that's been published so far is that it's not the product per se, it's perhaps how some dealers have actually sold it to their customer, and have they been completely open and transparent in terms of things like, for example, the annual customer mileage, which is the biggest sticking point, because of course by understating or reducing the customer's annual mileage to a minimum, you're effectively going to get to a lower customer monthly repayment. And I think that's probably the nub of the issue, more than the product itself.
Nigel, do you think that dealers are exposed for mis-selling under PPC?
I think obviously if you try and compare with PPI, which a lot of people do, then I think it's nowhere near that. I mean, obviously PPI was sold to people who didn't even need the product. I think obviously a PCP, everybody is getting the product to get a car, so there's that need there. I think there are more complexities around PCP when you compare it to HP, and I don't think that's always been taken into consideration by dealers when they're selling it. So historically, obviously, a HP is 5 years, it's £200, and that's the number that's in front of the customer. I think in terms of a PCP, that mentality still exists if you're not careful. So obviously, the emphasis is still on the monthly payment, and we see social media where still people will advertise on social media non-compliantly, and all that you've got there is the actual monthly payment, nothing else. So I think the risks then become with the other elements of the product that are there. As mentioned, excess mileage very rarely gets mentioned at the front end of the sale. So again, it's back end before it's mentioned. Annual mileage limits, again, don't get mentioned. And one that keeps coming up that not a lot of people think about is the fact that the interest charge in pound note terms is higher on a PCP than it is on a HP for the same period. And again, does that get mentioned to customers? Because if you have a cash-rich customer, they may have been better with PCP, with HP rather than PCP. And there's those factors. I think one interesting thing as well is because we focus on the FCA, but again, you've got the press, you've got FOS, the Financial Ombudsman Service, and these claims management companies. So again, these are all risks. FOS have already adjudicated on the customer side on a couple of excess mileage charges, even where the agreement highlighted the mileage. FOS came down on the customer side from a perspective that it was missold, that the mileage was too low, and they should have known that. And again, the excess mileage charges have been waived. So it is a more complex piece. It's an easy product if sold correctly, but obviously there's complexities with it that haven't been engaged.
Yeah, I'd agree with that point as well. And the other thing that I took from the research, certainly, which again backs up our stance and why we feel that ECP is a great product to have out there in the market, is that customers haven't been given real alternatives. They've been taken very much down a PCP sales track, but not given an HP alternative, either on a regular term, let's say up to 60 months, or by using a product like ours, then something that on an HP basis would give the customer access to the same sort of monthly payment, but without having the PC product attached to it.
Is this because PCPs are such a good way of getting customers back into dealerships at the end of their term that dealers don't really want to sell normal HP products anymore?
I think you have to go back to when the inception of PCP and when it was really kind of launched in this country by, I think it was Ford and the half-car type of approach to the product. It's grown arms and legs since then, and over the last few years, it has increasingly become the way to buy a used car and not just new. It was always the subvented product that was the way of manufacturers being able to get the customer back into a new car more often, and that was the beauty of it. Since then, it's become much more attractive in the used car arena as well, and I think that PCP penetration in the used space is now somewhere upwards of 40%. I read that something like over a million PCP agreements were actually wrote last year, which is just testament to the way that it has actually taken off. But people are buying a payment and not a product, and I think that's the key issue.
Nigel, how can dealers protect themselves when it comes to selling PCPs? Is there something they should be doing?
Yeah, I mean, I think it's very simple in terms of, but it's something that one of the workshops we've been doing, we talk about the spinning plates. A dealer's got so many things on, you know, he's got to sell cars, he's got his staff to look after, GDPR's coming through, and it's one of those things that just starts to get missed. Obviously, the focus on the sale, but if you don't do it compliantly, you're just storing up so many problems for yourself. So the key is that I think a lot of people miss is that you've got to be able to evidence what you're doing. I think some people think that if the FCA walked into their dealership, they could just sit across the table and they would just verbally tell them all the great things they do. I mean, that is never going to work. And if they haven't got a documented sales process, preferably system-based, that you can just click into, see that they've done everything, given out disclosure documents, shown the process that they've been through. And the key thing is, again, as we've said before, that they can really evidence that they've talked to the customer about mileage, potentially talked about the different products. I mean, again, I think one potential issue that you've got on a wider basis at the moment is, as you say, is that historically the product's been pushed by manufacturers through incentives. The dealers look at it as a good customer retention product, but then the problem becomes is, where's the customer? So if you're not putting the customer, as the FCA always say, at the heart of what you're doing, if it's about the manufacturer moving metal with their discounts, the dealer trying to get customer retention and obviously sell more cars, you've got to be able to show that the customer's been at the centre of what you've done and you've covered all bases and you can document in evidence.
Gwyn, is there similar experiences for you? Do you think dealers should be doing anything to protect themselves that they're not doing at the moment?
I think I'd echo exactly what you've just said. It's all about being able to have a right kind of process and being able to evidence it from end to end. The customer journey has to be at the centre of it, and the right kind of customer outcomes are absolutely key.
So what about when it comes to selling finance? I mean, it's getting increasingly more complex, but very, very important for dealers still. Have you got any top tips on what they should be doing and how they can maximise the opportunities?
I think that it goes back to the basics in many respects, that customers have to be properly qualified and they have to be presented with products that will suit them. And I think going back to my earlier point around PCP, and a PCP being the main kind of sales track or the main route that customers are guided down, what there hasn't been enough of perhaps in recent years is choice. And customers need to be offered choices to enable them to make the right kind of decision, and that's one of the reasons why we are such keen advocates of the product that we've created in ECP.
Nigel?
Yeah, I think one of the things is a lot of people, again, I think they see compliance as a separate issue from the sale, but the two should be combined. I mean, the fundamentals of compliance is good sales process. It's about qualification of your customer, so it's fact-finding and qualification. So it's not that you sell something and go through that process and then suddenly bolt on the compliance. It should be part of it, you know. So if you're doing a good fact find, if you're qualifying the customer, and I think the other thing is product range. You know, if you do have PCP, you do have leasing, you do have HP. You know, it's not a case of you've advertised PCP and that's all you're going to push. It's about giving the customer choice, but it is embedding the compliance within the journey, as we've said, you know, in the actual process itself.
One of the parts of the FCA investigation is about the relationship between lenders and dealers and the commission arrangements they have. Is this something that you think dealers should be worried about in the future?
I think that we're getting ever closer to full commission disclosure, and I think that the industry has an understanding of that. What the regulator has said in the most recent publication is that effectively looking at top-down or bottom-up commission arrangements, which is really what we know of in the industry as DIC type of commission calculation. Yeah, there's concern around that, whether or not it is working from a top rate and coming down by discounting it, or from a bottom-up and working from a base rate. Yes, they're both going to be coming under scrutiny. We haven't seen evidence of exactly how that's going to take shape, but it's certainly something that I think that the regulator will be looking at in more detail. Bear in mind, of course, that, you know, we're still in a situation, and we have been for some time, where if a customer comes into a dealership and enters into a transaction with the dealer, and they ask the dealer what commission that they've earned in that particular negotiation or that contract that they've committed to, then the dealer has a responsibility to disclose that.
Do they do that, Nigel? If you have much experience, the dealers actually happy to give out that sort of information to their customers? Should they?
Not that I'm aware of. I don't think that happens at the moment. I mean, I think the way the things are going at the moment is that if anybody saw the motor finance paper that came out from the FCA, is that I think they are actually starting to understand the business. If you think 4 years ago they weren't involved, this thing of actually they were financial services, the issue of suddenly being involved in an industry that actually sells products, so they're suddenly dealing with people who sell carpets, is obviously unknown to them. And I think that they are now getting to that stage of understanding this business, and obviously with that they can react better to it. So I think at this stage, again, as we've just said, is that I think you would say that commissions have been massaged a bit in terms of the old way was a low rate and you sell up, and now we're doing a high rate and selling down. And I think they're the same in essence. And I think the issue that you've got with commission arrangements is, again, it's counterproductive to good customer outcomes. So a higher rate, you get more commission, a lower rate, you earn less, but the customer gets a better deal. They're out of sync with each other. Whether they'll do commission disclosure, I think is an unknown, because they haven't done it with other products. But you would think they would start to tighten the net a little bit in terms of the way that lenders actually pay the dealers. And again, I think do the dealers need to be worried about it? I think, again, if you've got, some larger groups make millions of pounds out of finance. If something comes along and suddenly halves that kind of ability, then you could be talking millions to some organisations. So yeah, it's something that people need to be aware of and ready to act.
I think also, just to add on to that point, it's about, as we said a little bit earlier on, about evidencing good practice and consistency across the piece. So it's about ensuring that all customers are dealt with in the same kind of manner, and there is a documented process that supports that.
Should dealers be worried about talking about making profit? Profit's often seen as a dirty word. The next session is all about Profit Clinic and how dealers can make more money. But dealers are in business. Customers understand that. Surely they should expect that dealers are going to make some money out of a finance agreement. Isn't it just a matter of time that shouldn't they just disclose that and be done with it?
Yeah, I think there is obviously nothing wrong with making money. That's what we're all here for, and we wouldn't exist without it. I think the key is to get the balance. I think you've got to be very careful if one customer comes in and, again, you make £1,000 out of one customer and another one comes in and you make £100 out of that. I think it's very difficult to start justifying that kind of differential. So I think that the FCA talk about good practice a lot, and I think that is their belief, that if there is good practice, more transparency in what's done, is that people potentially could even make more profit. I don't think particularly. I think if a customer saw you making £2,000 from a deal, then I think they would jump back. If you make £300-400 out of a deal, then I don't think that would worry the majority of customers.
Gwyn, do you think the same?
Yeah, I agree. Absolutely, I'd echo that. It's about having, again, it's about having it comes back to process, and it's about treating customers in the same manner. And this is why we've seen so many, particularly larger franchise groups and car supermarkets as well, that they will have a standard rate at which they'll sell at, and they need to evidence that something in the order of 50% of their business is done at that rate. That's part and parcel of how they would tend to see them treating customers in the right way.
Are there any major changes coming up in the finance world for dealers that they need to have a heads up on?
I think in terms of finance products, if you're talking in finance product terms, I've spoken to a few dealer groups of late that have been saying, well, what's waiting in the wings? What's going to come and help us sell more cars in future? And that's a difficult question to answer, because I don't think that we are in the same sort of place as the US market, and maybe the market in different parts of Europe as well. Is lease going to be the next big thing? Is a form of contract hire going to be the next big thing in the used car market? I don't know is the answer. I can't really comment on that. It's the treatment of VAT that will have some impact on that. At the moment, I don't think that we're actually ready for that. I think that my view, and it's probably a personal view more than anything else, is that we will be selling cars on an HP or PCP type or lease purchase. You know, HP with balloon, it's the same thing on that kind of basis for some time to come.
Nigel?
I think definitely leasing must be the next. It's the next transition in a sense. As we start to talk, and everybody's talking about mobility, looking at other products, you know, in terms of the way that people buy phones and the way that that's done, is that you would expectation, and PCP obviously is that way of less equity in the vehicle that a customer has. So the next one you would argue is virtually no equity. Again, I think a lot of people have talked about the uncertainty, you know, Brexit, technology, diesel cars, as has been talked a lot about, you know, and the worries with that. So again, the leasing type of deal can protect you even more. From a compliance perspective, you know, we see a lot of people starting to advertise leasing because obviously it's a lot easier product to advertise. You don't have to do a full quote, you don't have an APR, you don't have a total amount payable. So I think that potentially I feel that new cars, you could see a big surge. Our biggest growth area, even from a compliance perspective, is working with online leasing companies. Lots of new starts. We're working with a couple of multinational companies coming over into the leasing sector. So we're definitely starting to see leasing sort of drive forward. And I think it's a bit like electrification. It's a case of how long will it take? I'm sure it'll be here. Whether that's 2-3 years or whether it's 10 years, I think it's a difficult one to say.
Okay, guys, thank you very much for your time. I really appreciate it. Coming up next at 10:30, we've got our profit clinic and how to make more money and cut your overhead. So join me in 5 minutes for that. Please put your hands together for my panel.
Thank you.